Let's do this, guys. Let's do it. Let's do it. Let's do it. Boom. Are you ready? All right, guys. All right, let's do it. Let's do it. Happy Saturday. Hope you're all doing well. Welcome to another Trading Poker Club session. You know, guys, these are where we meet up once a month to really take a specific concept, one or two concepts, and do a deep dive into that specific concept. What you're supposed to do here with these sessions is really collect them, just like we do in other sessions like the VIP Trading Club and things of that nature. But these things stack on top of each other, and they're all interconnected in one way or another. And over a period of time, you know, you'll start to see how each concept fits with another concept. And these things that we cover here can be potentially life-changing as far as your trading is concerned. And one little thing can actually reward you for your entire trading career. You know, so these things I think are extraordinarily valuable. All right, you want to take notes whenever you can, and you want to put the concepts to work. Like, one of the things that I don't want you doing is just rolling from one session to the other. Oh, that was cool, and you do nothing in between. You should really be going to work on the specific concept throughout the whole period until we cover the next concept. That's how you make something that can be understood intellectually. You make it yours through experience, through handling it, through grappling with it, looking for it, taking snapshots of it. That's the best thing. I'm always encouraging for my VIP Trading Club members. I encourage them to create little folders on their computers, on their desktops. And whenever they see a picture, they see a perfect scenario of what we went over, they should take it. I encourage that they take an image of it. All right. Take a snag it, or take a quick image of it and drop it in that folder. You should have a variety of these different folders dedicated to each concept. And whenever you see it, you should take a picture, right? Take a snapshot of it, all right, and drop it in that folder. And every now and then you go to that folder and just look through all the images you have in there. You know, just look through them. You know, and that type of work is what makes it yours, so that when these things occur in the market in real time, you instantly know it. Right? It's not foreign. You don't have to think about it. You don't have to analyze. You just know it. That's where we want to get. All right. So today, what I want to talk about, I want to do a deep dive today on tail bars. I want to go deep into tail bars, and I want to specifically cover one scenario with the tail bar, and make sure that everyone thoroughly understands what this bar is communicating to us. All right, and it'll give you a view as to how powerful it can be. So the first thing I need to do is to go to a whiteboard here. Erase this. And the first thing I want you to understand, obviously, there are 3 types of tail bars on the long buy side, and 3 types of tail bars on the short side. And the differences are really really lie in the color of the top. So you can have a tail bar that has a red body at the top. And of course, you can have a tail bar that has a green body at the top. All right, let's do that. And then you can have a tail bar that really doesn't have a color. It's sort of like that neutral tail bar, like that. Okay. And what you have to, what the first thing I want you to be aware of is that the importance of either of these bars, the important part is the tail itself. It is not the body. By definition, a tail bar has a small body. It actually stops being somewhat of a tail bar if the body gets too big. The body is small in all three of these. The smallest is the third one. The body's a straight line. In the left one, right, the uh, the body's a small red at the top. The second one, small green at the top. The differences between the tops are very small. There is a little difference, but it's so small, it's not really worth thinking about because 99% of the power is in the tail. So, for all practical purposes, these three are very close to being identical in terms of power. Now, if you force me to give you an order, the order would be this is number one, that's number two, and this is number three. The reason being is that each one of these bars was red when it was trading at the bottom. Each of these three bars were solid red when it was trading down here. Okay? When it was on its low, it was solid red. And then all of a sudden the bar started to eat through the red. Less red, less red, less red, less red. And number three, the bar ended before all the red could be eaten through. In bar two, all of the red was eaten through, all of it. And in bar one, not only was all the red eaten, but it kept going to produce the opposite color, green. So because number one not only ate through 100% of the red color, and because it actually went past the red to produce green, you'd have to say that number one is slightly more powerful. Number two, slightly more powerful than three. And number three in third spot. But I am telling you that the differences between these three are so negligible, it's not worth you trying to rate them. They they all mean the same thing. If the next bar, right, takes out the high. So if the next bar takes out the high in three, boom, it's still a buy. If the next bar takes out the high in one, it's still a buy. And if the next bar takes out the high in two, it's still a buy. So if you're going to do the same action, no matter what the top, it really doesn't matter which one you have. Very important to understand. But by definition, the body is little, not big. Now, the other criteria is that the tail must represent 80% or more of the entire bar's range. I am tired of people calling this a tail bar, right? These are wicks, but the tail has to be decent. It has to represent the vast majority of the bar's range. All right. That's the tail range, and this is the top range. You can't have a tail bar that's really equal in tail and equal in body. That's not a tail bar. Do you follow what I'm saying so far, guys? The tail must represent 80% or more, 80%, 85%, 90%, 95%. It's got to almost be entirely tail with a little body. That's a pure tail. All right. Otherwise, you're just dealing with a wick. Now, what makes the tail so powerful is the fact that when we're dealing with a bottoming tail bar, it's coming back. This is a comeback story, traders. Your tail bar is a comeback story. It is coming back from the grave. It's coming back from being on the ropes. It's coming back from red being the dominant power, and it's regaining its power. Green is regaining its power. The bulls are regaining their power. They are coming back off the ropes to conquer red, because at the bottom of the bar, it was all red. And the tail is sort of like the graffiti mark of this group called the Bulls. And they've left their mark saying, I'm back. All right. And all we need is for the next bar, in most cases, to confirm that that's true by going further. All right. Should the size of the tail bar be bigger than the majority of the bars, like an elephant bar? Um, um, yeah, yeah, I like the tail to be sizable. I like it to be a more sizable bar than normal. We don't have to take it so far as an elephant bar plus or something like that, but it should be decent size, because if it's not a decent size, then the victory is not that impressive. It's sort of like, if you're gonna if you're talking about a tail bar like that, right, versus the ones I have below it, the comeback story is just not that impressive. To go from here to there, it's like stepping over a little tiny curb on the sidewalk. But this is climbing a wall, right? That comeback story, that pushback of red is impressive. Whereas at this pushback of red, it's a pushback, but it's not that impressive of a pushback. So we don't want to go crazy with the size requirement, but we want it to be sizable enough to be impressed that the red, that was a decent amount of red that this bar eliminated. Now, you can have too much of a tail and it ruins it. It's almost like, if it's too long, then all the power has already been spent. And that usually fails, because the work to eliminate too much red, right, is already, the stock is already spent. So you can have too much, but if it's not enough, then the stock is already spent. So you can have too much, but if it's not enough, then the stock is already spent. So you can have too much, but if it's not enough, then the stock is already spent. So you can have too much, but if it's not enough, then the stock is already spent. So you can have too much, but if it's not enough, then the stock is already spent. So you can have too much, but if it's not enough, then the stock is already spent. So you can have too much, but if it's not enough, then the stock is already spent. So you can have too much, but if it's not enough, then the stock is already spent. So you can have too much, but if it's not enough, then the stock is already spent. So you can have too much, but if it's not enough, then the stock is already spent. So you can have too much, but if it's not enough, then the stock is already spent. So you can have too much, but if it's not enough, then the stock is already spent. So you can have too much, but if it's not enough, then the stock is already spent. So you can have too mu of a tail and it ruins it. All of your power has been used up. And any further power usually is short lived because it was all spent getting rid of all of this red. Do you guys follow what I'm saying? Too much of a good thing is not a good thing. You guys got that? All right. And so here is what you're looking for. No matter what color that is, the next bar, boom, that clears the high, that's your entry right there. All right? Boom. That's your entry. As soon as it crosses the high, you're in. You don't wait. You don't hesitate. You don't say, well, let's see if it goes a little higher. No, 1 penny above the high. Boom. That's your entry. You don't need confirmation of anything else because the tail itself is the proof that this is ready to go. Now, everything I'm telling you is the same in reverse, right? So you know. Tail bars are the most powerful when they are preceded. Bottoming tail bars are the most powerful when they're preceded by a down move. So down, 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 and tail bar. That's when they're powerful, when they're a V, down, down, tail bar, boom, and then up like that. That's when they're the most powerful, when they have been preceded by down bars. You guys got this. Down, 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 tail bar, bottoming tail bar. Boom. You found the bottom. All right. Same in reverse. Same in reverse, guys. Up, 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 tail bar. Right? Boom, boom, boom. Your tail bar, your topping tail bar is the most powerful when it has been preceded by up bars. All right. Now remember, this bar was green at the top. It was green. And then it lost, in this case, it lost all of its green and started to paint red. It's a very powerful sell signal right there. All right. Now let's talk about when you go in. So we know that in this case, you could, let's say your 200 was here. This is like a perfect play, right? You're moving up into resistance, the overhead 200. Boom, get a topping tail bar, and your entry is 1 penny under that bar. All right. But let's talk about, when is it that you get inside of the same bar? When do you enter, not the next bar, because this is the next bar entry. When do you enter the same bar? You enter the same bar if this body starts to grow like that. When the body stops being small, you enter in the bar right toward the end of the bar's formation, basically. So let me show it to you this way. Let's look at it this way. So here is your normal tail bar. We're going to paint that green. Let's do that green here. So we've already flipped red and started to produce green. Now, under normal circumstances, you would be buying the next bar here. You'd be buying the next bar there. But if this next piece happens on top, you're still it's the same thing, really. Boom. You're going to buy into the bar. Now it's subjective a little bit. You have to know that this is no longer, you have to be able to determine this is no longer a small green top. It's now going into a normal green bar. This is producing a normal green bar. Boom. I buy the bar itself. Now, if this is a 2-minute chart, I just have to make sure I'm in the second minute, not the first minute. That's it. As long as you're in the latter half of whatever bar you're dealing with. If it's a 5-minute, I'd want to make sure it's past the 3-minute mark or something like that, right? Just in the latter part of it. But that's the anticipatory entry of a tail bar. It's when the little body keeps growing, and now you say, well, that's not a little body anymore. Boom. All right. So in both cases, whether we're buying the next bar that happens or we're anticipating in the same bar, you're really kind of buying into the same space. Do you see what do you see that, guys? It's really the same buy. One is just happening in the same bar and the other's happening later in the next bar, but it's the same area that your entry is in. All right. Dorina, this is where I'm telling you that the entry is, right? I would not do that. I would wait for where I'm telling you to buy. All right. Dorina was asking, can I buy here when the red goes away? I would say no. This is why I'm telling you where the anticipatory entry is. Demand some green in your tail. Demand some green before you think about this possibly being an anticipatory entry. Demand some green and demand more than a little bit of green to hit it up. Demand that first. All right. All right. Now, we've covered some very important parts or concepts about the tail. Now, you know why it's powerful because it's a comeback story. You know that this is a comeback story. When everything was red, now it's red, and then all of a sudden, that red gets eaten. Less red, less red, less red, less red, less red. Now no red. Now green. That's the comeback story. At no time during the drop was there a comeback except now. At no time was red erased except now. At no time did the bulls show that they had any strength at all except now. All right. So this is very powerful. It's the comeback story. But let's look at something interesting. Let's look at this. Watch this. Boom, 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 boom. And look at this. Look at that. Let's say that stays green. Let's see. Something like that. Now you have a topping tail bar at the bottom. Remember I told you that the topping tail bar is powerful at the top. That suggests you're going down. But what about a topping tail bar at the bottom of a drop? This actually suggests you're going up. Now, I want you to understand what's happened here. This bar was all green at the top. See, it was like this at the top. And then it lost its green. It lost the majority of its green by dropping back, leaving behind a tail. See? It lost its umph, lost its strength. But why is that bullish? Well, it's bullish because you ever, I did this morning. I set my alarm. The alarm woke me up. I hit the snooze button. And guess what I did? Lay back down. Right? But that snooze is only an extra 10 minutes. The fact that I got up is the sign that my real getting up is close. Do you follow what I'm saying? It's giving you an early sign that this stock is going to get up for real and it's close. It just hit the snooze button. Because for the first time in the whole drop, guys, look, drop, that green wasn't able to do anything. Green wasn't able to do anything. Green wasn't able to do anything. And now for the first time, green shows strength, at least temporarily. And then it falls back, but at least it showed its first sign that it's waking up, that it can't be pushed straight down anymore, that it's now hitting back. It fell back, but it's not the same. You understand? It's an early sign that strength is coming. Now, let's go to charts. Let's take these concepts, right? Let's take these concepts and let's make them real by looking at real live scenarios. Screen here. Can you hear me, guys? Am I back? Can you hear me? All right, cool. All right, let me get the charts up here. Do it like this. A second here. All right, and boom. Okay, get you guys out of the way. All righty. All right, guys. Sorry about that. I got knocked off here. Let's see if I can get our image back here in a second. A second here. All right. And oh, okay. All right, guys. Can you hear me? Am I here? Got knocked off for a bit, but I'm back. Okay. Good. Good. Now, what you're looking at is a daily chart of Apple. Okay. Now, I want you to take a look at this. Here's a little heart there. Take a look here. Boom. You see that? So this stock was obviously dropping. And here you have a topping tail bar, but after a drop. You see, normally a topping tail bar after a rally, boom, is a negative sign. So up, 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 tail bar, that's a negative sign. But when it's at the bottom of a drop, 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 topping tail bar, that's a bullish sign, right? Drop, topping tail bar is a bullish sign. Where's your entry? Above the high. That's right, Costa. In a way, it is. Boom. Okay. Now look at this one. Look at your beautiful bottoming tail bar over here. Look at the beautiful bottoming tail bar. So look, down, 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 bottoming tail bar. Suggests there's going to be some upside here. Where's your entry? Above the high. Okay. Where's your entry here? Above the high. Okay. And Baba. All right. Here is your topping tail bar, but after a rally. See? Where's your entry? Under the low. The stop is, you have to do the stop above the tail. Very powerful when you understand what the tail is, why it's significant. It's a comeback story, and what has been happening before the tail. That's very important. All right, very important. All right. Um, all right. Let's see if we can. Bottoming tail bar. Drop. Bottoming tail bar and topping tail bar. After a rally and drop. Not much, but still a drop nonetheless. Okay. Topping tail bars can, when you know the significance, they can also help you know when you should lighten up. Let me give you an idea. Let's say, for instance, you bought this pullback back to the 20-period moving average here. All right. Now you're up, you're up, you're up. Each one of these bars opens and closes higher. Opens, closes higher. Opens, closes higher. See? So open, closes higher. Open here, closes higher. Open here, closes higher. Except here, opens here, closes lower, right? So if you were still long here and you at this point, you have another strong bar. But if this bar loses more than half, it's on its way to being a tail bar. Let me lighten up on my position. Right? So knowing what a tail bar is can also help you if you're in the play and you realize this bar is forming a tail bar on me, a topping tail bar on me, I'm going to take my profits here. All right? Make sense? All right. Very powerful, guys. Very powerful. All right. And you can pull up anything. We can take a look at look at this tail bar on Bitcoin right at the 200 after an impressive run. Boom, topping tail bar. Right? Not surprised. Look at this bottoming tail bar after a drop. Boom. All right. Here we move up into the declining 20. Topping tail bar. But what kind of topping tail bar is this? If this were stock, like we don't trade Bitcoin, but if we were, this would be an anticipation entry tail bar because the body stopped being small, right? Hybrid, that's right. The body stopped being small, boom, inside of the bar. All right. Drop, 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 bottoming tail bar. Boom. Up, 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 topping tail bar. Boom. Stop above the tail. Stop above the tail. It's a tough one, but your stop should be under the tails. See that one? And you can go, this is what I used to do, guys. I would just go chart after chart and just identify. I'd practice my identification signals here. All right, you see this? This is suggesting that green is coming back. Right? It lost some of it, leaving behind this tail, but it's like it's a snooze button. It should be coming. It should be coming. Topping tail bar at the bottom. But I used to just practice my opportunity spotting skills, just going, okay, we'll see. Here is, here's Tesla with the tail in place here. Well, let's see. If you would have gone in, your stop has to be there. Let's see if there's some upward movement from this tail. You did that one on Tesla? Nice. Okay. This is the power of your tails. Look at that. Up, 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 up. Topping tail bar. That's the no color version. Short underneath the low. Boom. Stop above. And the rest is history. Right? Kim, these lessons are gold. I mean, BTC. Yeah, these lessons are definitely BTC. I like that. So powerful, guys, powerful. And of course, guys, if one tail bar is powerful, can you imagine two back to back? You know, like you get two, like you get something like this, boom, 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 and then topping tail bar, topping tail bar. Like that is pure BTC right there. Right? Powerful. Now, someone was asking me the other day, Oliver, is it okay if I take like a concept like this, like one is, and just work on just that? Yes. Yes. There's nothing wrong with that. Now I would do two, I wouldn't do one. You don't you but I would, you don't have to tackle everything, and you shouldn't be tackling everything all at once. You should take one or two things and just work it this week. Just this week. I'm just going to work tail bars and maybe something else. All right. And just work them. And just, even if you don't take some of the plays, find them. Wow, here was one. Here was one. Here was one. That's how you make it yours. And what that does is it builds confidence when it happens to you and you're ready to take it. Like the fact that you've seen 1,000 of them gives you the confidence to play it the right way, you know? So go out there and grab these things, take snapshots, mark the chart up. All right, entry here, short, stop there, you know? Um, and there you have it. Any other questions? Do topping tail bars soon after move starts fall often? You mean, I'm not sure what you mean, Alex. You mean the topping tail bar soon after the move starts. So you mean like it's not too many bars up and there's a topping tail bar? Is that what you mean? Like it just start to move up? Yeah, well, those are are actually more neutral. Guys, the more you have gone up, right, the more powerful the tail, right? Does that make sense? The reversal is more powerful the more you've moved first. Same thing on the downside. The more you've gone down, the more powerful the tail bar is. Okay? So remember that reversal is more meaningful if you've dropped a lot or you've rallied a lot. Okay, let's see here. Let me see here. Let me get your questions here. So can you treat the second bar off the topping tail bar to be a gift play and sell into the power of the tail bar in this case? Um, if the tail bar is sizable enough, I do look at it as more of like an elephant bar, right? So if the tail bar is like that, okay, I see this like this. And so, yeah, I might short any bounce into the tail. That's my style. Boom. Yeah. Because that tail is the resistance zone, right? That tail is the resistance zone. Now, you can see down here, the topping tail bar is really more of a sign of strength because it's still kind of after a drop. It's not after a rally, right? It's different. It's more neutral. Yeah. DW is saying when you get, if you get a serious tail at the top, the pullback is usually not viable. The first one, anyway. Yeah. Because it's a more serious top, for sure. Rajiv said, okay, in the last session, we discussed that after a certain profit level, say 150, we should have a threshold limit to not go below, say 100. Now, is that 150 profit is realized gain, or is it sum of both realized gain and, oh, it's both. So, for instance, like, let's say, for instance, your threshold is 150, and you say, okay, when I get 150, I don't go home with less than 50. So now you could be 150 in one trade, your first trade of the day, and now you can't go below $50 in that trade and any subsequent trades either. Like you're going to go home with 50. So now your maximum loss for the day is 100, right? So if you are up 150 and your rule is once I get 150, I protect 50. Now since this is protected, your your total loss for the rest of the day is 100, no matter how many trades you take. But if you raise this, you know, it can change. But you should all have some threshold where you don't allow the market to take your money away from you. You don't want to do that too small. You want to say, okay, I made $20. I'm going to protect $5. No, that's too small. But there has to be some threshold where you now know you're going to go home with money. And guys, I will tell you that I did not have the luxury of letting the market take my money away, because if I didn't bring money home, I didn't eat. You understand? And so I couldn't allow the market to take my money. If I made it, I had to keep it or some part of it. All right. And I don't understand how traders allow the market to steal from them. I don't get that. I was never, I never had that luxury. I never let the market do that. So, yeah. All right. Oliver, can we look at Apple yesterday, 936 bar? Look at that beautiful tail bar there, guys. Look at that. You see it? Boom. Beauteous. Beautiful. All right. That's no longer the trap zone. Yeah, it's a different topic, guys, but that's not the trap zone anymore. This breaks the trap zone. This breaks the trap zone. It blocks the sun. The sun is now on this, right? So this becomes your buy zone, right? Yeah, because everything on the other side of this is blocked by the sun now, right? So this doesn't count anymore. It doesn't get any sun. Yeah. All right. Somebody want me to take a look at this. What was this, David? You wanted me to take a look at? You want to look at Apple yesterday, 936 bar. Is that an anticipation entry short, 936? Is this a short bar? I, if you short that, you definitely want it to be more of a scalp because that's power to the upside. You know, you want to buy the pullback after power like that. Boom. You know, power means buy the pullback if you get nice power here, right? Nice power there. You buy the pullback. I think that's a better play than trying to go short. All right. Boss, I had a very hard week doing everything right. Plays where you focus on tail bars appears to still be very relevant. Yeah, as long as you're sure that you're doing the right thing, you can't judge your trading, right, by the dollar results. I know we're after dollar results, but they the dollar results in the beginning don't reflect your growth. That's very frustrating, I know. But you can be losing and still growing. You got to make sure you just keep doing the right thing in the face of the negative results. As long as you're doing the right thing, it'll turn. You just have to keep going. Yeah, Ty. Those tail bars are very, very powerful, guys. Very powerful concept. You know, very powerful. So make it yours. All right, make it yours. Oliver, and the 20 MA doesn't matter at the time of the morning. All right, another topic, but the 20-period moving average gains more and more relevance as the morning goes on because you don't have any data from today. The 20-period moving average in the morning is reflecting the data from yesterday, but you're not trading the data from yesterday. So your 20 is not absolutely relevant until later in the morning. It gains its relevance as more data from today starts being reflected in the 20. All right. So it's the least important at the open. All right. And guys, I don't know. This market has been a very easy market. So if you're having a hard time, chances are you've just been a bull in the face of just straight red. So, I mean, you can throw a dart on the short side and make money in this market, right? Just throw a dart and whatever it lands on, just short it. I mean, we had that market environment in reverse for a while where you could just pretty much throw a dart and go long. Now we've got it on the short side. And you've got to be skeptical of longs. You've got to lean on the short side now until that changes. All right. Yeah, doubt up. Of course, you doubt up. It's common sense. Everything is straight down. You doubt the up. The up is being used to sell. Right? I'm a natural shorter as well, Patrick, as you know. Traders, love you to death. Go to work. Go to work. Wealth traders, we're on tomorrow at 10 a.m. New York time, my wealth traders. All right, I'll see you guys tomorrow. The rest of you, I'll see you next week. Ciao for now. Boom.